What's up, guys? Welcome to Pippin and Dippin Academy's YouTube channel. I am Joe Von Grixen. I got my partner in crime, Hunter, the Pip Hunter Burkett, here with me. And welcome. Today, we have something really special for you. We're going to go ahead and we're going to thank you to Mr. ICT. We've been implementing a lot of his concepts with what we are already teaching, just to really add that extra confluence and confirmation to our trading. And it's been fantastic, because we've married market maker method with ICT. We've married some of the concepts together, and it's really it's helped our students. It's helped Hunter and I. And so today we're going to share with you exactly what we're doing, how we're using ICT, how we're integrating it into our trading strategy, and we're using the TDI as confluence in those spaces. So without further ado, I'm going to go ahead and hand it over to Hunter. Let him take it away.
Heck yeah, guys, this is going to be super simple. It's going to be on, some trades that we able to get into. So it's really good stuff. It's just like I said, if you guys are the type of people that look at a chart and you're looking at a naked chart, right, and you're like, I don't know what I'm seeing, right? You feel like it's you when you get rid of indicators that you don't understand the market. We have people in our group like that, and I understand that. Even ICT talks about, if an indicator is giving you the ability to get into an effective trade and go the right way, and you've got good probability behind it, then continue to do what you're doing. I mean, I'm sure he even says in his videos that, that's a great thing. But, indicators are not be all. They're not. They're actually, really lagging indicators. They're just not the sauce. Price action is the sauce, right? But having an indicator, using it as a confluence is no big deal. It's like if you're going to run down the street, you're going to wear shoes, right? Indicator is like a pair of shoes, right? So I'm going to share my screen and we'll go at it right here. I'll go with USD CAD. This was a perfect example. I want to look here. We took this trade, but I'll explain it later. But more or less here, okay? More or less in this box. I want to go to the daily and show you guys that we were at a significant high. We were breaking down, and even trying to sell at that high was risky, right? But as we broke down from that high right there, and as we broke structure, look what we created. You guys know, if you're watching any of his content, this is a breaker, right? Because this is a multi-session in pattern, right? And the right leg took out the left leg, and we broke the neckline, right? So this was created as a breaker, and it left a imbalance below. So this trade the next day would be considered as, if you guys know market maker, would be considered as a safety trade, right? Because you have the pattern that's locked in. We break down. We've got the 1350 cross, right? Put that on, and then pull back to the 50 and then drop, right? But the sauce is behind, like what I was trying to teach about the TDI. The TDI is helping us. Okay, so let's engineer this. Let's dissect it. So you got buy side, okay, and you got sell side. We know that. So if we're in Asian, we don't trade London or Asian, right? Some of us do. But as me, I don't trade London because I want to see what London's going to give me, right? If I miss the trade, I miss the trade. I'll go to another pair. So as it's accumulating, right? I'm waiting. I'm not trading inside this box. I'm waiting for a liquidity grab, right? And you can see that at the neckline of the breaker, we have change this to black. We have an imbalance there. You can see that as we grab liquidity, we sting into that imbalance on the 15-minute time frame. So now it's time to go to the lower time frames. Okay, let it engineer, let it break down. We can see go down to the 5-minute time frame, and we can start to see it break down, right? This was about right here. But you can see, so we grab liquidity, we pull back down, we get into New York, right? I'm not making a move yet. Okay. So we come up, we come back to the order block, right? And we break structure. We break structure right here. Okay. I was like, cool. I'll wait for a pullback. Okay. And you can see there's no so-called imbalance fair value gap right here in the swing. So now I'm like, okay, I want to break down the lower time frame to see if I have that so I can enter the trade, right? But look, pay attention to this. Okay, I'm going to put my fibs on from that swing high to that swing low. Okay, and look how we pull into a 62% retracement. Okay, so now what we're looking for sales, right? Now we're in a premium price, okay, which is great. But now look how this, you guys know that we teach sharp fins. Look at the 5-minute sharp fin, okay? And that right there is very, very powerful, right? It's telling me that the market could potentially be reversing right here, right? And then all of my other confluences are meeting up too as well, right? So then I break down to the 1-minute time frame. Okay, sorry about that. And you can see right here, I'm going to get rid of the fibs because we already know that we're in a premium. Okay, you can see right here, look at this tiny imbalance fair value gap right there that we stung into, right? We created another little M pattern on the 1-minute time frame, and there was your entry. Okay, flawless victory. And what are you chasing? You have to understand, what are you chasing? Right? You're trading towards the money. So in the case of the trade right here, you're trading towards the money. So if you're way up here, okay, your stop loss is above, you know, what it could be above the fibs, whatever, 20 pips stop loss, 15 pips stop loss, running for, you know, there's a 2-to-1, right? If you were to, you know, let's go back. I just want to show you this real quick. If you want to go back and put your fibs on, right, from swing high to swing low, right? And then you have extensions. Look at the first extension was hit, okay, which is negative 0.5. Okay, next extension. And you could be taking, guys, you could take partials at liquidity. You could take partials at the extension here. Or I'm going to show you this. Hope we don't. Oh, it doesn't come back in time. Okay, that's fine. Let's see at right here. Let me pull this down. And you can see here it was at 1.3100. That was a 00 area. So that could have been a target. You guys know that that's institutional level. So that was a target, right? So there's plenty of areas that you can take your money, right? There's plenty of areas, right? So I just wanted to show you that. I want to show you one more on SPX. SPX, I don't have to really go in deep because this was just perfect, right? And we did get the trade on the 1-minute time frame, okay? So, but everything met up here, okay? So you had, boom, you had liquidity. Let me change that to red so you know, guys know that red is like, I use it for liquidity, okay? And then you had sell side. But I also want you to pay attention to, you know, what it fell into. So we'll go back to the 15-minute time frame. Over here, you can see that we had a previous order block right there, okay? And above that order block, he talks about this too. An order block with fair value gap imbalance right above it is solid, right? So you can see right here that we had a tiny imbalance. Look at the wick, guys. Okay. Now look at the shark fin. Okay. Now we're going to go to the lower time frame. We did snipe an entry right here. Was it more risky? Absolutely. But at the end of the day, we let it break structure. And then when we pull back into, we seen that, you guys seen it. Right here, what did it leave? It left an imbalance right here. Okay. Look how precise we come into it, right? What do we have? So me and Joe's like, hey guys, we're getting ready to snipe another entry on SPX because of what? We have broken structure to the upside. We have pulled all the way back into a imbalance, right? And then we have a shark fin, and also we're at discount. You can see that I only have the 62, but this was 70.5, and also a 79% retracement, an OTE entry. Okay, And then look, flawless victory. What were you chasing? You were chasing buy side. Okay, here. So why are we telling you this? Because guys, like the TDI, to me, I've been trading with the TDI well before I even found ICT. But I use it. I've been using it. It's made me a profitable trader. I use it like I use my tennis shoes when I go running. You know what I'm saying? It's just an extra confluence. But at the end of the day, it's not an all be all. You know what I mean? You don't come in here and say, "Oh, shark fin, let's take it." No, it's an extra confluence of being right there, right? And it was right there, printing perfectly. We got to the 1 minute time frame right here, and it was a beautiful W pattern right here on the 1 minute time frame with the shark fin. It took the trade, right? It was flawless. Okay, inside what? Inside, and he does talk about, you guys watch his content, he does talk about the PM session, but look at the box. We're inside the window. Okay, this is where most of the high probability setups are happening, even in London. Your high probability setups are happening in London. They're happening in New York. Okay, I want to be where the most volume's at, and it's in this session. We do not trade this session. X out. Boom. I'm sure you can trade inside of Asian and different pairs, but we like New York, especially loving SPX. We trade a lot of SPX, right? So with that, guys, you can see it doesn't, like, just wait for this stuff. You know what I'm saying? You find your direction, okay? You know your time, okay? You understand order blocks, liquidity, imbalance, and you don't need anything else. I just gave you everything. It's all you have to know. Okay. You go to your higher time frame, figure out where the big points of interest and liquidity areas there are. Okay. And then you're going to figure out, okay, the market is, the price is going to be drawn to that area because there's money there, right? We're going to go take that lower high out. Okay. And then you're going to figure out your direction for maybe that week, for the next, 2 or 3 days, because you could be getting close to the high. You never know. So, but then break down and engineer your trade setup like this, because it's the same thing as you looking on the daily time frame, looking to get money. Guys, you got to think about it. There's orders everywhere. There's money everywhere, and it's just being taken. Okay, and people are getting burnt on these moves. But you got to understand how the algorithm is moving, and once you understand that, your trades will start to blossom. All right, Joe, did I miss anything, bro?
No, that was perfect. That's perfect. I mean, guys, it's so easy. It's what's between our ears that makes it hard. So watch this video over and over again. Hunter gave you tons of nuggets. Check out ICT's channel too. I mean, we're giving him props because, I mean, this is, he helped us out, indirectly a bunch just by some of the stuff that we integrated, imbalances, fair value gaps, all that good stuff. And so, but like Hunter said, we've been trading shark fins for years, and it makes more sense now that we have confluence with actual price action, from ICT and all the good stuff, all the goodness that he gave us. So watch this video over and over again. If you haven't already, subscribe to our channel, hit the subscribe button. There'll be a button on the video here in a second. Make sure you get notified anytime we have a new video. And two, if you're ready for mentorship, because really one of the biggest things you got to do is get a coach, right? You can watch YouTube all day long. However, the reality is Hunter and I went down that rabbit hole. The problem with that is that you never get locked in on a strategy. You kind of keep getting, it's the shiny object syndrome. You kind of get pulled around in a bunch of different directions. And really at the end of the day, there's some great content on on YouTube. However, it's more used for marketing, for some people. And so they distract you from actually, getting good at your skill set, getting good at adding to your tool belt. So if you're ready to do that, we have a promotion going on until this Friday. My mom's passing, 5th anniversary of passing was yesterday. And so as a special treat in honor of my mom, we're doing a 25% discount to enter our academy. So it's a smoking deal. It's already a smoking deal if you paid full price. There's tons and tons of value. But with that, guys, watch the video, check out the rest of our videos, follow us. There's all kinds of resources we have for you, free resources We have a free Telegram, you know, or follow us on one of the social media platforms, whether it's IG, TikTok, or here on YouTube, whatever the case may be. Guys, get engaged with us. We offer tons of value, and we want to, at the end of the day, we just want to see you succeed. So with that, guys, thank you for stopping by Pippin and Dippin's YouTube channel, and we'll look forward to seeing you in the next video. Until then, take care, guys.
Peace, guys.